In April, a bunch of countries led by Saudi Arabia got together and said, why are prices sticking in the low 70s? And what if they go down further? Let's do something about it. So they made a cut, nothing happened. And then the Saudis decided they have to make another cut. When you take basically 2 million barrels a day out of a market, that's the difference between inventories building and inventories drawing. And that's what we're having now.
So from here, do you see it continuing to go higher?
We think this is a third quarter phenomenon. And we definitely think that there's going to be incremental supply coming into the market in the fourth quarter that's going to more than meet demand. So we have in our numbers, assuming the Saudis are going to bring back that 1 million barrels a day, we have a million and a half barrels a day of inventory growth in the last quarter of the year. And that'll bring prices down again if that works out that way.
Who's bringing the incremental supply? Is it a compliance issue or somebody else?
Now, the incremental supply is coming from a bunch of different places. Non-OPEC is one of them. We expect U.S. supply, which in the petroleum supply monthlies is already at total liquids at 2.3 million barrels a day, 21.3 million a day. That's a record. No country in the world has ever produced that much liquids. We think the crude oil side of it's going to go up to 13.2 before the end of the year. That in the numbers, you see it in the reporting of companies. They have greater efficiency than they had a year ago based on the drilling rates that they've come down to. And their production is growing, their efficiency is growing. It comes from Canada with the end of the wildfires. It's coming from another big slug of Guyana. You can't look at the Western Hemisphere without looking at a solid million barrels a day of incremental supply. And then there are 5 countries in OPEC that people shouldn't be writing off. We used to call them the Fragile Five. They're Iran, Iraq, Nigeria, Libya, and Venezuela. If you look at their numbers, they're almost all coming up.
Do you think retail gasoline is a threat to the consumer?
Retail gasoline has affected the consumer. I think there's a big debate as to whether it's the price. The price of gasoline is up around 40 cents on average from where it was on average in December. It's still 75 cents lower than it was a year ago. There are other things taking place. And yeah, demand is up. We think it's up by about 140,000 barrels a day. It actually, on the weekly numbers in July, went down from June. So that might be price, but it might be a change in habit. It might be a change in the efficiency of the fleet. There are a lot of other things going on besides the price of oil.
Because last year, they seemed to be able to absorb the higher prices decently well. You talk to executives in the banking space, and they say consumers are still relatively flush with cash. Do you think that they're able to absorb these levels as well?
We think they're able to absorb these levels, and it's not our judgment that the price is what's doing it. It's very much our judgment that it's a change in driving habits around. 2 big changes. We look at the job market and we forget that we're having a record number of retirements. This has been the case since the beginning of the pandemic. You're taking people out of the labor market who had on average 3 cars per family. They now have 2, and nobody's going to work, and they're driving a lot less. So yeah, employment is up, but the retirements are up too. Then we look at the efficiency of the fleet, which has gone up significantly. It's gone up significantly because of these supply chain problems. And as a result of them, auto manufacturers decided to sell the most expensive cars they could sell, which turned out to be much more energy efficient than what they otherwise might be selling. And you have the EV penetration. And if you've been, as I have been, a renter of vehicles this summer, I've rented 3 vehicles in 3 weeks in a row. The lowest average of the 3 cars that I rented was 38 miles per gallon.